Hey everyone, welcome back to Corporate Decoder. Today we're cracking open Camping World's latest proxy statement. Think of it as their annual report card, but with a few extra credit questions about officer exculpation. Let's see what surprises this document holds. This isn't just about numbers, it's about the future of this company. We'll break down who's up for election, what's happening with their compensation plans, and even a surprising shift in how much a regular worker gets paid compared to the CEO. Ready to decode? Let's dive in. First things first, what's a proxy statement? Simply put, it's how Camping World asks its shareholders for permission to vote on important company matters. Think of it as their way of saying, hey, we need your opinion on this. This year's annual meeting is on May 15, 2025. Stockholders will be voting on several key proposals ranging from electing directors to approving the company's incentive plan. 3 Class 3 directors are up for election: Brian Cassidy, Marcus Lemonis, the CEO, and Michael Malone. If elected, they'll serve until the 2028 annual meeting. It's basically a popularity contest, but with higher stakes. It's important to note that some of these director nominations are influenced by pre-existing voting agreements. This means certain major shareholders have already designated who they want on the board. In other words, the election isn't entirely a free-for-all. Next up, shareholders get to rubber stamp the appointment of Deloitte & Touche as the company's independent accounting firm. It is highly unlikely this will not be ratified, as is often the case. Shareholders also have an advisory vote on executive compensation. This is a say-on-pay vote, letting them voice their opinion on how much the top executives are making. The board isn't required to act on this vote, but they usually pay attention to what shareholders think. Here's where things get interesting. Camping World wants to amend its corporate charter to protect its officers from certain lawsuits. Specifically, it wants to limit their liability for breaches of fiduciary duty, meaning if an officer makes a bad decision, they might not be held personally responsible. They claim that if this passes, Camping World will be better positioned to attract top officer candidates and retain their current officers. The company wants to revamp its 2016 incentive award plan. This involves extending the plan indefinitely and streamlining some performance-based compensation rules. They are retaining certain provisions in the 2016 plan related to individual award limits on performance-based compensation, although it is no longer required. This is probably because it's good governance. Now let's check the chart summarizing outstanding equity awards. As of February 28, 2025, Camping World had approximately 2.5 million time-based restricted stock units outstanding. That is 4.1% of their shares outstanding. Also note that 4.9 million shares were available for grant under the 2016 plan. Let's look at some of the people involved. Brian Cassidy, for example, is the president and a partner at Crestview. This gives him strong private equity investment experience and some company oversight that can be useful on the board. Marcus Lemonis, the CEO, also sits on the board of Beyond Inc. as executive chair and principal executive officer. Having a CEO so involved in multiple companies can sometimes be a cause for concern, but it also speaks to Lemonis' ambition. Diving into executive compensation, these executives are rewarded based on Camping World's performance. This is to ensure their interests align with company and shareholder success. Their packages have base salaries, annual incentives, stock-based compensation, and other benefits. In 2024, performance-based cash incentives were given to executives other than Mr. Lemonis to reward them for performance. Some executives received bonuses up to $600,000, and some received a percentage of the company-wide consolidated adjusted EBITDA. It's good to see that they are incentivized to perform well. The audit committee's pre-approval policy is also important. It ensures that the company's auditors, Deloitte & Touche, aren't getting paid for services that might compromise their independence. This protects investors by ensuring that there are no conflicting interests that may occur. Shareholders are asked to approve, on an advisory basis, the compensation of the named executive officers. Abstaining the vote will have the same effect as votes against this proposal. Important for non-employee directors, they cannot be rewarded more than $500,000 annually for both cash and equity awards to avoid issues that may arise. Deloitte & Touche charged Camping World $7.2 million in fees in 2024. A decent amount of those fees went to audit fees. A summary of the amended 2016 plan shows options outstanding under the 2016 plan are worth only 0.2% of shares outstanding. Time-based restricted stock units outstanding under the 2016 plan are 7 under the 2016 plan are 7 on 8% at %. So In the amended 2016 plan, shares tendered or withheld to satisfy any tax withholding obligations with respect to awards under the amended 2016 plan will not be added for the purpose of granting additional shares in the future. This prevents the reuse of shares to increase the number of available shares that may be issued and prevent dilution. In that amended plan, the sum of the grant date fair value of all equity-based awards, and the maximum amount that may become payable pursuant to all cash-based awards that may be compensation for services as a non-employee director during any calendar year may not exceed $500,000. We know of no other business that will be presented at the annual meeting. If any other matter properly comes before the stockholders for a vote at the annual meeting, however, the proxy holders named on the company's proxy card will vote your shares in accordance with their best judgment. There were 62 million shares of Class A common stock as of February 28, 2025. That's a lot of shares. There's been a changing of the guard in the Compensation Committee. Mary George is no longer the chair, but will remain a member and continue to serve as lead independent director. Also, Brian Cassidy will serve as a member of the Compensation Committee, but instead will serve as chair of the Nominating and Corporate Governance Committee. It's also noted in this report that the company determined that there was no recovery of incentive-based compensation as the correction of an error to previously issued financial statements resulted in no changes to the performance metrics used to determine incentive-based compensation for executive officers during the last 3 completed fiscal years. As required by law, Camping World disclosed its CEO pay ratio. The CEO's total compensation was roughly $1,000, while the median employee made about $52,000. This results in a CEO pay ratio of 0.26 to 1 cent. The CEO pay ratio seems lower than usual because the CEO's compensation consisted solely of health premium gross-up payments. Effective October 2, 2020, our board adopted a policy for the recompensation, the clawback policy. That applies to certain incentive-based compensation received by the company's current and former executive officers in the event the company is required to prepare a qualifying accounting restatement. Our clawback policy is intended to comply with SEC and NYC listing requirements. The plan administrator may modify award terms, establish subplans, and/or adjust other terms and conditions of awards. Subject to the share limits described above, all awards will be subject to the provisions of any clawback policy implemented by our company to the extent set forth in such clawback policy and/or in the applicable award agreement. Independent director of the board have appointed Ms. George to serve as our lead independent director. The lead independent director's responsibilities include, without limitation, approving board and annual stockholder meeting schedules and setting agendas, together with the chairman of the board and chief executive officer. Kathleen S. Lane has served on the board of directors of Camping World Holdings, Inc. since March 2024. Ms. Lane previously served as a director of Bob Evans Farms, Inc. Ms. Lane's experience in retail industries and as a chief information officer provides our board of directors with valuable expertise in key focus areas and makes Ms. Lane well qualified to serve on our board of directors with valuable expertise in key focus areas and makes Ms. Lane well qualified to serve on our board of directors with valuable expertise in key focus areas and makes Ms. Lane well qualified to serve on our board of directors with valuable expertise in key focus areas and makes Ms. Lane well qualified to serve on our board of directors with valuable expertise in key focus areas and makes Ms. Lane well qualified to serve on our board of directors. Set forth below are the fees paid to our independent registered public accounting firm, Deloitte SGA, for the fiscal years ended December 31, 2024 and 2023 in thousands. Fees were mostly for audit fees. Diving into the financials appendix, it mentions adjusted EBITDA, which is a non-GAAP measure and defined as the net income before other interest expense, tax provisions, depreciation and amortization, further adjusted for the impact of certain non-cash and other items. There were a couple of charts for the cumulative total return, which seems to be a better indicator than some of the data that they had for specific metrics. Planned benefits. Number of restricted stock units at target by share awards of 4 and 2, all current executive officers as a group. The code of business, conduct and ethics that applies to all of our directors, officers and employees. As a result of the voting agreement, we expect that the parties to the agreement acting in conjunction will control the election of directors at Camping World. The amended 2016 plan provides that the maximum amount that may be paid in cash under an award pursuant to the amended 2016 plan to any one participant during any calendar year period is $5 million. Alright, time for a verdict. What's the story here? Camping World seems to be going through a period of adjustment, while they're streamlining some internal processes and making moves to retain their top talent. The recent officer exculpation amendment raises questions of just how much and to whom should that liability be restricted to. While they are streamlining performance-based compensations, they will still have individual limits. The good news, they're focused on key people and also maintaining standards even if not legally required. The bad news, as a shareholder, some of these moves might not have you jumping for joy. Ultimately, Camping World's future hinges on how well they navigate the shifting sands of executive talent, risk management, and shareholder interests. It's a complex equation, and the coming years will be the real test. Thanks for watching. If you enjoyed this breakdown, hit that like button, drop a comment and subscribe for more deep dives into the world of corporate filings.